Picture a world where rising tides threaten coastal cities, where scorching heat waves parch fertile lands, and where the once unpredictable storms now follow a grim calendar. Welcome to the world of climate risk, where our planet's changing climate has ushered in a new era of challenges and uncertainties. In today's Risk Talk, we embark on a journey through the turbulent landscape of climate risk, exploring its profound impact on our lives, our communities, and our future. Join us as we dive into the depth of this pressing issue, uncovering the urgent need for action. Buckle up, climate is changing, and the risks are real. And to hear with us on this particular talk show, we have two very special guests from CPI, Climate Policy Initiative, Mr. Dhruba and Ms. Neha. I would request the delegates to kindly introduce themselves.
Good morning and thank you for inviting Climate Policy Initiative, myself Dhruba Purkayastha and my colleague Neha Khanna to this important talk show on climate risk. Thank you. And just as a starting point, I would go with the common understanding of the approach that the insurance and the financial services industry tend to use for climate risk, and the term is called ESG. ESG stands for Environment, Social and Governance. ESG and moving up the path on ESG does not necessarily address climate risk. Climate risk arises from a small component of E, or rather a large component of E, if I may say so, and emissions, primarily carbon emissions. And therefore it is imperative that the risks arising from emissions which lead to global warming and climate change, and therefore affects the insurance industry significantly, be also factored in. And it is important that the insurance industry recognizes climate risk, measures climate risk. Insurance will increasingly become very important for protection of life and property, and actually it does encompass both life insurance and general insurance in India. And therefore it is critical that any insurance company takes cognizance, and I'm very happy to see Bajaj doing so in terms of recognizing and addressing and trying to address its process and systems towards it. In that, it is often quoted that in climate and climate finance, we talk about future has become the past. This is about nothing more than time sensitivity. We have a very short time or a very short window, so the problem has been recognized for decades. And given from that point of time, we are having a very short window globally to reduce emissions as far as possible and bring it down in terms of the time frames that science tells us which is through IPCC, is we have a window till 2030, 2032, somewhere around that time frame. And why then future becomes the past is, this is not a problem which will be faced by most people in our generation. We are talking about far into the distance, and therefore it is often an anomaly to say that future is the past. What is expected yesterday, it has happened today. Therefore, what you were expecting in the future has already happened, and therefore it is called future is already past us. One of the critical things to understand is, why is the future past? Is because as citizens, as government, and as finance, and as corporates, we have always tended to discount the future to today, to pass through. So insurance industry remains critical and important for the world to cope up with climate change. Thank you.
So it's very scary to understand that we have already passed through the future. And do you mean to say that, I just want to seek opinion from both of you, your thoughts. We have seen a lot of events across the globe recently, and we have heard a lot of people talking about that this is being contributed by the climate change. And if we say that the future is already past us, how much time do we have, and what impact we can see this taking towards the financial sector, the growing financial sector from our country perspective?
Thank you. Well, let's look at it like this. When you read reports put out by IPCC, put out by International Energy Association, all of them tend to tell us that the window is shortening for 1.5 degree centigrade warming. The question therefore is, I'm not a scientist, none of us are from what we do. Therefore, what is happening is what is considered to be a feedback loop, which means one problem of increase in temperature may compound into rainfall problems, may compound into glacier melting, can compound into what happened in Sikkim, which has a particular acronym in terms of glacial lake bursting. So what you are seeing today is the impact. Now, how does this impact affect the financial sector? It does affect the financial sector from a credit point of view, and they call it climate-related financial risk, which does need to get measured into credit risk and incorporated. But at the same time, insurance, when I come to insurance, it's about protection. It's about protection against loss and damage. Therefore, there are two ways out. One is to assess the impact that climate change will happen on the loss portfolios that you have as insurance. Insurance will fulfill its social responsibility of coping up, of letting or making humanity cope up with disaster. So you are in a insurance industry is both in a sweet spot and also in a place where the world will look forward to insurance industry from saving it financially. Thank you.
Thank you so much, sir. Neha, over to you. I just want to hear your view on this, and you can add up your views on what regulatory changes or policy level changes we can expect in the coming times. You can also talk about how TPI is involved and what work do you do with our various bodies across the country.
Thank you so much for this opportunity. So continuing with what Dhruba said, climate change is here. And while the 1.5 degree target is expected to officially get breached in a couple of years, we are seeing the impact of it today as well, where we've had geographies crossing that benchmark, and it leads to multiple impacts. And the feedback loop is not just about the climate change causing rainfall and lake outbursts and all of that, but also the simple perspective that as temperatures rise, we will have lesser and lesser opportunities to actually be able to control them, and which is where the need for both focus on both adaptation and mitigation becomes very crucial, and insurance has a critical role to play here. And I will echo Dhruba's point on the fact that it is both an opportunity but also a constraint, because insurance will need to have a PPP model in some capacity where the public finance is able to be used to leverage the private finance in this particular case for insurance, because insurance companies by themselves may not actually be able to shoulder the burden of the kind of claims that could be expected, and also could lead to a simple problem of lack of insurance. So where the desire or the ideal outcome would be to increase insurance cover, we have been seeing this trend where insurance cover is tending to drop in certain areas due to extreme weather event actions which have already happened or which are predicted to be happening, because not only are they increasing in frequency, they're also increasing in severity. And most of the science has been so far unable to really keep up with that, as the reports say. So where do we see the whole policy and the regulatory, and what would we want? I don't claim to know what we could see, but what we would ideally want. More focus on parametric insurance. The last couple of years has seen the Indian insurance sector starting to embrace and talk and offer products around it. But greater in-depth penetration of the parametric insurance product would be one aspect. And for this, obviously, a whole ecosystem will have to be built where you will need to have data being collected, modeling being done. And so it's not just about the insurance product being offered, but rather the ecosystem development that needs to take place. The second would be, so while you have products like Fasal Bima Yojana, you will need more such products, not only for the agriculture sector, but for overall other sectors as well in the insurance space. And the insurance companies will need support where a model maybe which has some contribution from the public finance and some from the insurance sector is a potential way forward. Globally, both insurance and reinsurers have a critical role to play. And in India, that becomes even more imperative because we are one of the most vulnerable nations to climate change. We have a rising population, a rising demographic, and the impact of climate change could result in social implications as well, which need to be helmed. And the third, our financial sector, whether it's the banking sector, the capital market, or the insurance, right now is in a unique position where the pivoting can happen, where we have the ability to actually understand, accept that these risks exist, but also identify opportunities. So maybe bundling of insurance products with a loan product could be a way forward. So let's just take an example of a home loan, for example, an area which is prone to floods, let's say Chennai. One outcome of repeated floodings could be lesser insurance cover because it becomes exorbitantly expensive. The other feature could be that you do get subsidized insurance products or you bundle them up with existing services, thereby enabling a wider adoption of these products. It would be great to see the policymakers and regulators come out with one, acceptance that climate-related financial risks are material for the insurance sector. And while I know that acceptance exists, possibly internally, but an external visible declaration of the same would go a long way, because that would enable the next step, which would be regulation around measurement and hence management of climate-related financial risk impact on the insurance sector. If we look at the banking sector, we've seen those progress happen over the last 2-3 years with RBI joining NTFS, and we look forward to, well, not only insurance but also pension funds, so IRDA and PFRDA as regulators, coming out with working group committees and potential action plans on how the insurance sector can take cognizance of this particular problem. How does it impact their businesses? And it's not just about insurance being a safeguard for the country, but also how do insurers safeguard or put in place measures so that their businesses can, I won't say weather the risk, but rather manage it and beautifully come out of it in supporting the financial flow that is required to manage this kind of a risk. So that's how we look at it. And at CPI, the work that we're doing is pervasive, where we're looking at both trying to understand how to manage these climate-related financial risks, how to mobilize green finance, how to mobilize finance, what are the roles that different subsectors within the financial sector have to play. So banks have their own role, NBFCs have their own role, capital markets have their own role, and insurers definitely have their own role. And what are the steps from a policy perspective, from a regulatory perspective, and from a market perspective? Let's also just spend maybe a minute to talk about the fact that as much a role as the policymakers and regulators have, I think it's also incumbent on the market players and the industry to also be vocal about the fact that yes, these are there. And I think Bajaj is a leading example of how to take those steps and be ahead of the game in saying, yes, we understand that these challenges are coming, but we are ready and we're starting to offer these products. We are starting to innovate with financial instruments and come out with game-changing products which will help both the insurer and the market. So that's my perspective.
Thank you so much, Neha. I think a very important point mentioned by you. The industry needs an ecosystem, an entire ecosystem that runs throughout the length and the breadth of the country, because we have seen the penetration to be very less. And we see at large catastrophic events or large events that happens, we see a lot of economic damage, but we see a very less portion being utilized by insured. And this conventionally happens because of lesser penetration or under insurance. So communities like CPI and us, the entire industry, the financial sector, other corporates can definitely join hands and talk about this particular subject more vocally. And we can also talk about various behaviors, the corporates can demonstrate in terms of either educating climate related behavior or the individuals in general can adapt to various things. You also mentioned about mitigation and adaptability. I think these are very important areas. And thanks again to bring on a lot of risk and opportunities when we talk about climate risk. With everything we talk about risk, we see a lot of opportunities. To Dhruva sir, when we read climate risk, we understand that very popularly, the climate risk is divided into two types of risk: physical risk and the transition risk. Few thoughts on these two areas from you.
Thank you. Climate related, I want to use the term climate related financial risk because one looks at climate risk, it impacts everyone. A climate change event risks were there. They were there in the initial dispensation I would think they are there definitely in Basel when it originated. This event risk is getting amplified, but what's important to recognize is that climate change is actually impairing the ability of a business to pay back, and therefore it essentially compounds on what otherwise would have been a normal credit risk or a normal investment risk. And that to explain that further, as an insurance company, there would have been some investments that you would have an insurance company would park it for the long term on a bond which appeared to be AAA rated or a AA rated. But the question is that AA long-term rated bond may not remain AA, not in the normal course of transition as rating agencies put it, but the transition from the AA towards an A, that is what is called the incremental climate-related financial risk. Now, this arises from two sources. Source number one is the physical part of it. The physical part of it today, science has possibly mapped it to a certain level of latitude and longitude where you know very clearly that a place A is going to face higher severity and higher frequency of climate events. That may be a storm, that may be snow, that may be glacier melting, that may be heat, that may be a cyclone. The question is, the severity and frequency of these climate events are seen to be going up, and therefore at every latitude, longitude intersection, the global GFDR as they call it, GFUNG, FDR or GTRR, and a lot of other institutions have mapped what is the physical risk. But that physical risk, for it to become relevant for an insurance or a finance company, needs to be measured as to how much does it change the expected loss and how much does it change the loss given default. Therefore, the second part, as you rightly mentioned, is the transition risk. Now, transition is about coping up with climate change, which means coping up has got two components. Component number one, which the world is getting pushed to reduce emissions. Or let me put it that way. The developed countries are also including developing countries in the same trajectory of the need to reduce emissions. And India and China happen to be one of the largest emitters. But as discussed earlier, the problem is not of flow, the problem is of stock of carbon dioxide. But having said so, India has participated wholeheartedly in the overall process of being an equal partner to the process of mitigating and trying to reduce emissions from a global standpoint. But this requires a policy transition, this requires a behavioral transition, which you alluded to sometime, of a behavioral transition and a policy transition. And that transition, if it were to be done very sharply, therefore even NGFS advocates possibly for, or every other institution or regulator advocates for an orderly transition. And if that orderly transition were not to happen, for the policymaker and regulator, is it like it is saying that I have managed or I have reduced my emissions to zero because I have closed down all emissions that can arise out of the geography, but then both your real economy and financial sector therefore collapses, and the regulator will get concerned about it. So they do not act linearly, they act in different ways, and this recognition, it is important that we understand that both of them, while acting together to increase the climate risk, they have different drivers and they have different impacts. We need to be conscious about that too independently. But for insurance, I would still tend to believe that physical risk remains more important to be addressed from what is insured, and B, from on the other side of the investment side of an insurance company. One has to also understand that there is a mark to market of assets and equity and bonds which are there. They may also undergo significant valuation changes, and therefore there may be a need to have a relook from the overall solvency point of view for an insurance company. Thank you.
Very good point, sir. Thank you so much for that. We have read about a lot of corporate initiatives, various disclosures, sustainability reports. I want to hear from both of you. How can individual contribute? We have been hearing about kids talking about reduce, reuse, recycle. We are talking about reducing carbon footprint at an individual level, sustainable consumptions, renewable energy, water consumptions. Neha spoke about adaptation. So how do we bring it into our personal lives, and what can we do about these things? Can you just highlight on how an individual can take efforts and join the entire journey of managing climate change?
I'll take a shot at it and request Neha to come in.
Yes.
I think this issue lies not only at the individual. This is what Mark Carney talked about, the conflict between value and values. We all talk about values, and values mean which are universal, which are supposed to be good for humanity, which are supposed to be universal, and you're supposed to be a good corporate citizen and a good human being at the same time. And therefore, practice living through things which do not leave an impact, negative impact, either on your environment or on your future generation. However, when it comes to finance concentrates on value. And that value is measured by what? It is measured by a particular term called a return on investment. It is measured by discounting rates. It is measured by IRRs. It is measured by risk-adjusted returns. It is measured by capital appreciation of a stock market investment. It is measured by all these terminologies which are taught in finance. And each of them have one simple construct which is called the discount rate. Imagine if you had not discounted it at a value at which you discount the future for the last, let's say, 70 years, then these issues would have been far lesser. So how do you resolve the differences between a value construct which the corporate focuses on versus values which are universal and need to be imbibed? And the only way that the world has come together today is to say and insist on disclosure of what you are doing good for the society. However, here is an important point for India, that the framework Indian regulator has accepted, which is SEBI, is the impact of the environment on the company and has not gone ahead with environment or the impact of company or an enterprise on the environment. Maybe we will see that coming in, and that then will lead to what you are desiring, the lifestyle changes that you are thinking about. And I do agree with you, they should become practiced, and that should become a practice. Over to Neha.
Thanks, Dhruba. So, trying to answer your particular question, I think India has actually been at the forefront of this with Mission Life, where the sustainable consumption, environmentally conscious lifestyle has been promoted, not just for individuals but also for corporates. And just adding on to what Dhruba said, it becomes even more imperative because the last X number of years, the focus has been more on a growth rate approach to life rather than a conscious living approach. And going forward, as individuals, as corporations, we can take small steps in terms of being more aware, having more conscious demands that we approach life with, being more conservative, being more, not conservative in the risks sense of space, but more in terms of how do you walk the path that we're all talking, where climate change is for everyone to see. So going green, increasing solar or increasing renewable energy, those are steps that individuals and corporates can take where possible, living a more sustainable lifestyle, if I may put it that way. But if we come down to the financial sector perspective, the disclosures are the first step, and hopefully all regulators actually, because disclosures do fall under their ambit, will in the coming times focus and insist on disclosures where impact on environment and impact of environment both are assessed, so as to enable a holistic decision-making process.
Thank you so much, Neha. I think looking at what risk we are exposed to and what opportunities we are exposed to in the future, I think we should always look at the positives of whatever is coming to us. There definitely is going to be a lot of investment in solar farms, carbon capture and storage capacities. We will see a lot of wind turbines coming in. We will, I think, probably have more and more focus on parametric insurance. I'm also seeing a trend around environmental liability insurance from a global point of view. And we might also expect to have green construction, which will be supported by insurance and fintechs probably. And various opportunities right from innovative products to doing risk assessment, doing engagement from a customer resilience support, customer awareness point of view. This entire change, when we talk about, the future is the new past, also expose and gives a lot of platform for companies like us and the industries like us to have a positive concentration on opportunity side, as well as educating and managing on from a corporate governance point of view or a social responsibility point of view on the risk side. It was an engaging discussion today. I think we will have to split this into another series of discussion wherein we talk more specific about what can be done around this particular challenge which we are exposed to. And my closing thoughts is, I think this was just a beginning from our side, an initiative with the Risk Talk series, that we tell people that something is important as we take steps as quickly as possible so that we leave a better legacy for our future to come in. Your closing thoughts on this?
Well, thank you. Thank you for getting us onto such a platform, and it will be closing thoughts on Climate Policy Initiative. We happen to be an advisory and analysis organization, and we are a global non-profit institution, but we are a private limited entity in India, and we work with a large number of stakeholders, which includes the government, regulators, and the industry. And particularly towards this effect, we have created a knowledge center, and we call it the Center for Sustainable Finance. And I think in this path and in the journey, thank you for engaging us in this manner and therefore allowing us to spread the word of what our mission is to drive. We work at the nexus of policy and finance, and our idea is more investments should happen in climate. But I'll end with a silver lining. While there is a cloud, but there is a silver lining of opportunity, which you indicated, whether it is in renewable, EVs, carbon capture and storage, hydrogen, all of it will significantly need insurance. So that business will continue. In addition to that, drawing you closer to India, I think one of the instruments which IRDA has now allowed general insurance companies is the surety insurance. And the surety insurance, where there is lack of surety which stops finance from flowing in, and that product may really be a game changer for a very low hanging fruit, which is called energy efficiency. If we improve energy efficiency, electricity consumption, that we scope 2 that we call it, in all our activities, if there is a surety provided, then finance will flow in, and that's a massive opportunity. In addition, rooftop solar for micro, small and medium industries, and providing a surety assurance over there would also go a long way, because India's employment output and exports are all dependent on SME. Thank you.
Thank you so much, sir. Bajaj Allianz General is the pioneer in this particular segment, and we are the first to introduce this product in India. I think the entire company celebrates it. Neha, over to you.
Thank you, Bajaj, for giving us this opportunity to actually have a discussion on such important topics. I will echo, insurance is, in my personal view, one of the pillars which will help in addressing the financial flow problem. And I firmly believe that for every risk that exists, there is an opportunity that exists in the market as well. And India has been a pioneer and will continue to be a pioneer in identifying sustainable innovations in both the financial space as well as the industry space to tackle climate change and to help adapt to the impacts of climate change. So,
thank you, Mr. Dhruba. Thank you, Neha. Thank you to all our viewers. For Bajaj, I am Avis Sayyed, carrying yours.